We're hoping to close this strongly for you. We want to really arm you with usable insight. So there's no one-size-fits-all reason why VCs decide to invest or not invest, but I have asked my colleagues here to avoid generalizations and to be as specific as they possibly can. This was actually something Dee guided us to. There's a lot of stuff you can read and good blogs out there that we don't have to repeat. But I hope we can give you some insight that can actually help you. I will say that part of this is on you. I'm going to open up to questions earlier than I usually would. We'll do 20 minutes of our conversation, and then I'm going to open this up and let you start asking questions. I would just ask that you be direct about what it is you need to know. I imagine, having listened to part of the last conversation, that you will do that. But we have a great panel here today. Do you want me to tell you a little bit more about the panelists? I thought maybe. So I did come prepared. Haley, as you heard, is a partner at First Round Capital, which was really one of the earliest VCs to see opportunity here in New York City. They're investors in an enormous number of awesome companies: Uber, Warby Parker, Mint, many, many others. Before that, she actually co-founded Birchbox out of Harvard B School, and she ran marketing, strategy, technology, operations. Am I missing anything? For 5 or 6 years there before joining First Round. Sue Tien is a partner at Female Founders Fund, which invests in technology startups with female leadership. We often partner with them at BBG Ventures. They're our sister VC. Before she joined F3, she was an investor at FirstMark Capital, where she focused on healthcare, IT, fintech, and e-commerce. She's got startup chops too. She ran sales and marketing at Market Factory, which was one of FirstMark's portfolio companies. And Charles Hudson is the founding partner at San Francisco-based Precursor Ventures, which is an early-stage fund that invests in hardware and software companies in New York City, Toronto, and San Francisco. Before he launched Precursor, he was a partner at Softtech VC. And something that I did not know until this morning, he was also the founder and CEO of Bionic Panda Games, the mobile games company that launched Aquapets. So all three of them have been on your side of the table before, and I think that should make this a useful conversation too. So I'm going to start with Charles, because we had a conversation a couple of days ago where I said that the elephant in the room here is that these women believe that they are at a disadvantage because they're black females who are out there trying to raise money. So my question to you is there a different expectation or different requirements for women of color when they go in to raise money from a VC? Is it true? And if so, how should they deal with it?
I'll try to give you some of my observations, and as Haley and I were joking, we have a large portfolio at Precursor, so we've invested in about 150 companies across both of our funds. And of those 150, we have 10 that are led and founded by black women. But about a quarter to 30% of our portfolio companies have a black founder. And I have to tell you, the black male founders in our portfolio have it easier. And I think it's the man thing. And I think I even have to keep an eye on myself. Like, we have about twice as many black male founders as we do black female founders. And I think, I'm like convinced it's easier. It's the just male to male rapport thing. It makes that whole process subconsciously like friction-free for guys, and it helps. And they have it harder than their white male colleagues, like no doubt about it. And so when I look at some of the female founders in our portfolio, like the topics we talk about, one is, how do I handle going into a situation where the person across the room, not only am I 100% chance I'm going to be the only black female in the room while I'm pitching, how do I deal with the fact that I might be pitching a fund that's never invested in somebody who looks like me? They might not have social relationships outside of work with people who look like me. They might have never had a black female boss. They might have weird stereotypes about, I think there's so much that goes into it. And I think the challenge is most of the founders in our portfolio have reacted by saying, well, that means we have to be at, if everyone else has to be at 100K in recurring revenue, I have to be at 200 or 250. I have to like outperform the benchmark. And I've really struggled to figure out, where do I take our black female founders where they can have a really good fundraising experience. And I have to tell you, some of the things, this is typically what happens. I met so-and-so, she was amazing. Yeah, I agree, she's great. But we just like couldn't quite get there on blah, blah, blah. And it's never direct, and it's never honest. And I actually asked somebody who I've sent 4 or 5 of our black female founders to, and this person sort of reading between the lines said, I'm afraid to be honest. And I think he thinks that if he tells you the truth, he's gonna hurt your feelings. And I was like, these people are doing the hardest thing in the world. They're putting themselves out there and starting a company. You don't help anybody by giving them anything but the truth about what it is about the business that you don't. You can say, I don't like your category. And my friend said, well, I can't relate to the customer. I said, you invest in quantum computing companies. You're not like a physicist. You don't actually understand. And I think there's all of these like verbal tics and reflexive things that people do that when I point them out to them, people are embarrassed or they're ashamed, but it doesn't seem to stop them from doing it. And so I think then I'll stop. But I think one of the real challenges is sometimes it feels to me like it's actually the responsibility of the industry's decided black VCs and female VCs are responsible for sifting through the world of black females and anointing the good ones. And we will look at the ones that those two pools of people choose and anoint, which is horrible because if you're not in that set, because those investors, like if you're doing a B2B company, you might not, Suchan might be like, hey, that's not really our thing. And like that has nothing to do with the quality of your company. It has everything to do with the focus areas of the people on this fund. So I think it's very clear to me that the only solution to this is we need more black female VCs. Like I really don't know of a faster way to change things than to give money to the people who you want to fund. And my associate Sydney, she's black. She brings in companies that I wouldn't ever see because they know her, they're part of her universe, they're part of her world, and she brings them in, and I think that makes our firm better. So I think sometimes people are looking for these really complicated solutions. I'm like, if you put black people on your investment team and you promote them and give them authority, I predict you'll get more, better, and higher quality black female entrepreneurs coming into your firm. And if you don't, I think it's really, really hard unless you have a really killer brand and you really extend yourself to be open. I've really struggled with this issue.
So I think that's absolutely true, and I'm just going to ask you one follow-up, and then we're going to move on. But that's not going to help the women in this room right now who are trying to raise money. So given what they are looking at over the next 3 months, 6 months, a year, many of you, I think, have actually raised a seed fund, but you're going to have to raise a Series A, you're going to have to raise growth capital. So what would you recommend? And I would ask that of the two of you, too. And I would certainly bring Allraise into that. But let's start with you, Charles.
I think the best thing is if you just think of fundraising as sales, because that's really what it is. I think it's a lot easier to sell to someone who's already gotten over the hump, who's shown you through some of their past actions that they will fund someone who looks like you or like in that general domain of people of color. And I think there's a lot more funds who aspire to do this than have actually proven it. And if I were in your shoes, I would say I'm going to start with the list of firms that actually have some visual evidence that this is something that they care about doing. And I would figure out who in my network is connected to those funds, because many of you in here have raised and have met other people. So I'm sure there's a lot of good connections here. I would start with that set of people, and I would over-index on trying to get them interested in my business, because I think trying to be the first is really hard. Not you should write other people off, but I think the odds of you being successful with someone who's already gotten comfortable are just higher.
Okay. Any recommendations? And then I'm going to move on to something else that I would really like each of you to dig into.
Yeah, I will add 2 other tactics to that. First is just vet investors upfront. Don't let them waste your time only to give you a half-ass answer and after you spend an hour with them or 2 weeks later. Up front, say, I just want to ask you, do you invest in this category? I'm raising this amount of money. Is this in your sweet spot? And ask them examples of companies in that category. I think it's just easier if you vet them up front, or even do it over email. This is a mistake that I actually made when I was fundraising, that I thought, they're investors, they give people money, why wouldn't they give me money? And investors are always looking for, like, maybe it'll work out, or like option value of just having a conversation. So, I met with people who had never invested in an e-commerce company, and I tried to pitch them an e-commerce company. I shouldn't have done that. So it is okay for you to ask the hard questions up front, even in an email intro, even in the first 5 minutes of a phone call, just so your time is valuable. The second thing I would say is leverage each other. White dudes do. They are constantly talking to each other about, who'd you talk to your fundraise? What was your valuation? What did you say when they said that? And you don't have to pretend that someone's born knowing how to fundraise, or that asking questions or saying, walk me through literally step by step how it went down for you when you raised your A, is cheating. No, like, do it. Like, use each other. Every single investor conversation that you have, don't keep that to yourself. Share that with the people in this room, so that you can all learn from it, both about the quality of the conversation and the openness of that investor. But it's just a language, and it's a dance, and rapport matters, and you could build that yourself by having your own conversations, or you could share your experiences across companies, and I really encourage you to do that too.
I would double click on that. I agree. I think it's one, looking for people who have invested in minority founders, who have invested in women. The second, though, is that the reality of many people's fundraisers is that I think in an ideal world, you have 7 competing term sheets, and you can pick the best partner, and everyone's taking you out to dinner and drinks and all of that. But that rarely happens. And in the absence of that, I think many people are you are optimizing for those conversations that seem to be moving the furthest, whether or not those happen to be the ones where there's already demonstrated interest in investing in minority founders, for example. But I do think that to the extent you can optimize around something, whether it's category interest, right, finding people who may not have invested in as many female founders in the past, but have invested a lot in enterprise SaaS, right, and understand that space. I think you need to develop some commonality, as opposed to spreading your efforts too thin. You have to have that be in that good middle ground between spreading your efforts too thin and then over optimizing and targeting very few people. And then the other thing I'll say is that, from our perspective, so we have across 2 funds and 30 some odd portfolio companies, we have 2 companies in our portfolio that are founded by or co-founded by Black women. One of them is Shine, and Mara's in the back, and she's awesome. And one of the things that we've asked Mara to do fairly consistently, and probably, at the expense of doing other important things for her business, but we've asked her, we've said, we don't like the ratio of founders in our portfolio. About half of our founders are minority or non-white, but only 2 founders are African American, and we want to change that. And the first thing that we do is certainly ask our network who we should be talking to. And so that piece that Haley was mentioning around, leveraging each other, I think it goes the opposite way as well, where many funds who have invested in female founders or minority founders are looking to invest more and double down in that space.
And I found sometimes founders feel like, oh, I shouldn't make intros to my investors because they'll judge me on the quality of the companies that I send. It's actually the opposite, at least for me, probably for you guys too. I want to see everything. So don't hold back or feel like you only need to send the absolute best of your friends' companies to your investors. Just be really upfront with them. Say, I love this person. I haven't vetted the business model, but I really, here you go. Let me know if you want to talk to them. No pressure. And I think most investors will be like, yes, I'm not, like, maybe I'm not networked into this community as much as I would like to. And they will really thank you for, even if they don't decide to take the intro, they will thank you for letting them see that opportunity.
Okay, I'm going to ask you one last question before I open it up to you guys, which is, can you give people an example? You don't have to name names, but can you walk us through why you ended up saying yes to an investment? And maybe especially if you put down the term sheet. And even better if it was something where you weren't sure at the start, but what pushed you over the edge? What made you feel comfortable about saying, I'm going to put money into this? And on the alternative side, can you give us an example of a company that you thought sounded really awesome, and what stopped you from investing? Do you want to start, Sutian?
Sure, let's start. We'll go the opposite way this time. A company in our portfolio that in our portfolio that we ended up investing in. I will talk about the first example first, or the first example of a company that we ended up investing in, and it took a little bit of. Or a little more than a little bit of diligencing and getting comfortable with the opportunity. We are investors in a company called Tempest. They are a sobriety program and a community for sober individuals. And we met Holly, the CEO, the founder and CEO. I met her early last year when she was out raising her seed round. And this is not a deal that we actually ended up leading because we took a little too long to get our ducks in a row, which I have some regrets about. But it was a company where I did not know a lot about Alcoholics Anonymous or various inpatient and outpatient rehab programs for substance abuse and addiction and recovery. And this was, so going into it, we had a bunch of unknowns that we had to uncover, right? When we think about investing, and especially at the stage that we invest, which is the seed round, it's team, TAM, team, right? Which means that the thing that we look for and the thing that we try to diligence the most is the founding team and the founders and who you are. Because the reality of that relationship is that's going to be the one that those are the people that we're working with for the next 5 to 10 years. And that's the important piece to us about the business, because most everything else will change either a little or pretty dramatically as the company scales. And when we first looked at the space, I think it was interesting, and we were excited about it because it seemed like there was a fat middle within alcohol, substance abuse, and recovery, where there are programs and communities like Alcoholics Anonymous, which are very grassroots, very not-for-profit, and then very expensive inpatient and outpatient programs. But for a big portion of individuals in the middle where they wanted help with maybe drinking too much, or maybe they didn't identify necessarily as alcoholics, there weren't a lot of alternatives for them. So we were excited about the market opportunity and that there was nothing there. We didn't know how big necessarily the business could get, because when we looked at various comps in the market, it seemed like there were a lot of private equity takeouts, but not a ton of very few public company stories, and very little technology success to date in that space. What got us over the hump there it was a couple of things. One, through our diligence process, I was very clear with Holly to say, hey, Holly, it seems, and the other thing that we were concerned about the business, was that the brand itself at that point was called Hip Sobriety. It was predicated largely on Holly and her personal brand. And we had a point of view that she needed to scale that past herself and scale the business itself past Holly Whitaker, founder and CEO of Hip Sobriety. When we were going through the diligence process, we were pretty clear with Holly about these various concerns, and it was a couple things that took us over the edge here. One, or I should take a step back. When we think about investing, we think about what takes us into the area of conviction almost as a sum of parts, right? If you think about it as an equation, it's 10x, x being the strength of founders, plus 7 or 5y, y being the size of the market or the size of the market opportunity, plus a bunch of other things. And if you add all those things together, if it crests 100, that's sort of the point where we're like, okay, we should really get serious about issuing a term sheet and moving forward with this investment. I'm oversimplifying it, but that's effectively how we think about deals. And when we were going through the process with Holly and we were talking about our concerns, one of the things that allayed a number of our concerns was her ability to understand the unknowns that we were grappling with, deliver information and data to help us get comfortable with our due diligence, and also be very articulate and thoughtful and responsive during that process, so that in a situation where we didn't have the luxury of getting to know Holly for the 6 months before she was out fundraising, in a very compressed 3-week span, we got up the curve in terms of being comfortable and excited about her trustworthiness, her ability as a leader, her ability to persevere, and her ability to sell throughout our interactions with her. And so largely, this is a very long-winded way of saying we had a number of concerns around the size of the business that she could ultimately build. The important thing to us was that we were very transparent about that throughout the process. She took that in, and then she was very quick and thoughtful in delivering back data that we asked for, or due diligence that helped us get comfortable. And it was the manner with which we developed that relationship and how comfortable we were able to get with her quickly that got us over the edge to invest in that company.
I had promised to open this up at this point. Do you want me to, okay, to,
Sorry.
go ahead.
Hello, people. My name is Viola Llewellyn. I'm very black, I'm very female. I'm a co-founder. I'm angry, trying not to be. I am the founder of a fintech platform that is not only for Africans, it is in Africa. Here's the problem, right? No one gets punished intellectually, emotionally, or financially saying no to black women or to Africans. You will never get turned down. You'll instead be congratulated if you don't make the foolish mistake of investing in something that doesn't align with what the preconceived ideas of physical success are. White men in 3/4 zipped hoodies or any of their equivalent. The issue that I really want to point out, and I am speaking on behalf of anybody else who agrees with me, and on behalf of those that don't, frankly, is that how are you going to educate yourselves to keep up with the evolution of women here who innovate for a space that, because no one's looking at it, they don't have the competence for it. Neither do they know how to ask the questions to couch and understand. I love what you said at the end about the thoughtfulness and the diligence that is returned. But the truth of the matter is this: in this world, on this green earth, there is no negative impact to say no to a black woman, ever. I have come to these little New York streets and chitty-chatted with a few unmelanated males, and the first thing they like to say, oh, African risk. What freaking risk? Do you even understand the separate areas? No, you don't. And you don't ask the questions. You'll talk about an addressable size of market, and I'm sure there are parallels to every woman here. Now, I'm not telling you people off, but this is a safe space, right? Why is this the case? At what point do we find a way to tell the story of the fool that said no? At what point do we find a way to aggregate the surprising acceleration of all of the successes of all of the DNA sitting in this room? At what point do you say that, well, we don't know the history of the success? Oh, look, you know what? A bunch of slaves built this country, okay? So as it comes to being a freaking startup, we're damn amazing. I don't mean to pontificate. It's just that sometimes Americans don't like to say naughty things, but I do. I'm not from here. My green card is safe. But the fact of the matter is this. Until there is a punishing spotlight on individuals that don't get it, and the reflection of those like the wonderful unicorn woman here and many of those who are coming up here, this nonsense is going to continue. And we need your help to redefine what success looks like and look at the alternative parameters that we bring to the table, which are just bloody awesome. Right now, everybody in here is raising capital of some sort, and the way in which we can bring economies of fantasticness to the little we have. Bring a white boy that can kick my ass, because he can't.
We have two African companies in my portfolio. Both have female founders. But I want to tell you something. I met with my largest investor today. I said, hey, I have a company in Nigeria and one in Ghana. And he said, what the hell are you doing with my money? I said, look, you pay me for judgment. I invested in the companies because I think they're good companies. When they work out, you'll be happy. And I think the thing you mentioned, I have a startup venture fund, and I met a bunch of people, and they said, well, show me all the successful black female. I go, show me all the money that's gone to them. Well, if I saw success, I would give them money. I'm like, you've got it backwards. It doesn't work that way. The capital has to come first. And I think in Africa, there's a handful of companies in FedTech that are already meaningful, and people just don't know yet. And I think it's interesting, the reason this is like a cheap hack, the reason that of the two companies, one of my LPs, I'm like, oh, I met this company through YC. They're like, oh, okay, well then it's fine. As an investor, you cannot wait for your investors to give you permission to do things that are risky, because they're risk avoiders. If you think VCs are conservative, the people who give money to VCs are like 100 times more conservative. And honestly, one of the nice things about having a small fund is I don't really have to negotiate with anybody about doing wacky things like writing checks. I have companies in Mexico too, and my LPs are like, why are you investing in Mexico? I'm like, because I think there's great companies there. Isn't that what you pay me to do? But it would have been really easy to just say, you know what, Nigeria, political situation is too risky. It's too far away for me to provide governance. There's a million reasons to say no. And until we have more success stories, I think there's always an easy out for people to say, well, no one's proven to me that investing this way and this type of person works out. I think it's intellectually lazy and it's wrong. You have every right to be angry.
I'm not angry anymore now that you said that. But thank you.
Hi, I'm Star, and I'm the founder and CEO of 4D Healthware, Artificially Intelligent Chronic Disease Management. When I first started raising capital, I heard a lot about this friends and family round. I've raised $2.5 million. I raised $63,000 from friends and family. I am the friends and family. Most of us in this room I graduated from Kellogg. People in this room went to Harvard, Stanford, Wharton, MIT. And we're the people that the family actually, I don't want to say turns on, but my family was disappointed that I left my six-figure job at IBM to start a company, because I'm the one that buys books for the other kids who are in school. I'm the one that pays the gas bill when the lights get, when the lights get cut off. So I'm saying all of that to say I don't think that my story is different from a lot of people in this room, but we hear a lot about what needs to change, how much capital goes to black women. Everybody knows all of these things. You know it. And I built my company with $2.5 million. My number one competitor has $70 million. $70 million. He gets to make a hell of a lot more mistakes than I get to make. I have had to take every step in a very calculated way. Okay, now here comes the question. Why is it that when a VC looks at my company, so the first question you started out with is, Are you looking at these companies differently? I want to add to that, should you be? Because I have debt, because I had to get it, because no one would give me any money. I have a valuation that may be lower than my peers, not because my company is less valuable, but because nobody would give me any money. So if you continue to look at my company like you look at Bill, Jeff's, Brad's, and Mike's, it's going to always be a problem. So what are you going to do to start looking at our companies differently?
I think it's a good question, and I think, Sutian mentioned that so much about investing is about understanding the founder and understanding their path to how they got to starting a company. And I think the concept of distance traveled and the friction, the walls that had to be broken through in order to get to that place where you're sitting in the room and doing the pitch, it has to be taken into account. And it's something that we do think about in the process when we're doing reference calls. Also, when we're talking to the founder, what have you done that was off the beaten path? When did you experience adversity, and how did you problem solve? And sometimes hearing the same stories about people getting straight A's from Ivy League schools isn't what gets us fired up. It's instead about hearing how someone put themselves through med school by having a job driving an ambulance. And the more that you could share some of those stories about your distance traveled, I think it helps in terms of VCs being able to value that experience, the unique experience that you bring to the ridiculously hard thing of starting, growing, and scaling a company. And so I think maybe, you might think that you're not supposed to talk about your life story, but I think it's important data points to helping people make the right decision.
I had one little quick thing.
Yeah.
I also just think there's this weird thing that happens. I think there's like founders, and then there's like founders of color. When a founder fails in a portfolio of a lot of assets, people go, well, there's always a million reasons why I failed. I don't quite understand, or I refuse to accept this notion that I think when a black female founder or a black male founder, you're an N of one, you're like 100, you might be 100% of that person's exposure to entrepreneurs of color. And it does something weird to some partnership psychology where if this company fails, it's not that Star couldn't get it over the finish line. It's like we were going to extrapolate this one experience to an entire category of people. And this is an asymmetric thing that happens, and I've been in the room at partnership conversations at different firms where this has happened, and it's really bad.
They'll even justify it as, this is the reason we shouldn't have done it, and we'll never do it again because this category that looks like this now is a failure point, and therefore no more.
And it's a weird asymmetric generalization and it doesn't happen. It's not surprise. It's not applied uniformly to all founders in all cases of success or failure.
So I'd just like to follow up with you too about what you'd like to see happen, right?
So, you want me to answer?
Yeah. Yep.
Absolutely. I think the first thing that has to happen, I got a call from USA Today. That's what I do. I want to interview you. I saw you in Vanity Fair. I know you raised $2.5 million. I want to talk to you about racism and venture capital. Yeah. You don't want to talk to me. But what I suggest you do is call Mark Andreessen and call Bill Gates and call whoever else and have them say, you need to invest in Star Cunningham. But don't ask me to solve the problem. The white men that have the money have to solve the problem.
It's so hard to dodge those stories too, because they will chase you down and they will not let you go until you give them some type of comment.
And it becomes self-fulfilling in its negativity sometimes.
Yeah, I think it's important that, first of all, hi, Mindy Francis, Global Brand Consulting Firm, UFCG. I'm responsible for a lot of deal flow to VCs, and I'm so happy. Where's Dee? Yes. Thank you for this. It's great to let everybody get all of this out, and I'm so happy we have this forum for it, but you may agree with me or not, but it is what it is. And we need moments like this you're all founders, you're all powerful women and men in this room. And it's forums like this that allow us to get our stories out. And the narrative, thank you Forbes, Winning, and MSNBC, because the journalism and the stories that we get out are the conversations and the narratives that need to be had. You know, when USA Today comes to you, they need to bring Bill Gates into the story and demand that he comments, but you're gonna have to share those stories. We have a responsibility in essence, because we have to be the voice for those who haven't even made it to this platform or this room. And that's what's really important. You know, it's not gonna change unless it becomes something that's talked about, and that's what we're starting to do here today.
Hi, everyone. My name is Asmao Ahmed. I'm the founder of Plum Perfect. I've met some of you on the panel before. And I feel it's important to share this story because I think a lot of us here are the women that were featured in Vanity Fair, have raised over $1 million, et cetera. But I look at my quote back there, and this is like an essence of what I am about to say, which is that the relationships that we build as Black women have to be very deliberate. Right? And the relationships we build with our investors is even more, has to be even more deliberate because we are Black women and there are overt and unconscious biases that we face every day. I want to share a story of what one of my investors said to me at a point that I was having a difficult time raising money and they wanted to replace me as the CEO. They brought in another Black woman to deliver this message to me, which was, and the example they gave was, you know, when a woman CEO is announced on Wall Street, the stock price goes down. It's not because the entire market is betting against her, it's they're anticipating that the next person will bet against her. So in other words, they're not the ones being biased to me, because clearly they invested in me, but they're anticipating that other people may have a preconceived notion about me, my abilities as a founder and an engineer to grow this company and scale this company. And as a result, we need to replace you as CEO, but we still want you here. It's just optics, right? So I have a question for you guys, and I really need you guys to think about this honestly. You mentioned that you're accountable to your investors, right? Ultimately, are we as Black women just fundamentally higher risk investments for you? Just a yes or a no. Do you think we are?
No.
No.
No, but I think you get asked different questions. Like
And what would that be?
I think there's all these like questions that I now understand. Well, do you think she can recruit? Do you think she can hire? And I'm like, I know what's behind that question. It's, do you think she can get people to work for her because she's a Black woman? And people ask these, what on the surface sound like innocent enough, legitimate questions about investments. And they're not innocent, they're loaded, and you learn a lot by the questions people ask. And I will say this, I expect all of our Black female founders to have a more difficult time fundraising, not because their businesses aren't as good, but because I'm a realist about what some other people think. But that's not a reason not to invest. That's a reason to work harder with the teams that you back so that they can get over those humps. But I know there's some people who are just like, this is hard. Why should I do hard things? I could do easy things. I could just invest in this class of person who's very easy to finance, who has all the connections, who doesn't need that much help, who's on their third company. Like, why should I do this thing that's harder? So I don't know if it's higher risk. I do know there are people out there, and I don't think anyone on this panel, who thinks this is a harder way for me to make money. Why should I do the harder thing?
Okay, thank you.
I just
One,
wanted to go,
two.
I
Yep.
just wanted to go back to, you guys didn't have an opportunity to answer that question, which I found.
Sorry.
No, not at all. I appreciated every minute of your answer. It was fantastic. But I'm just curious, like, what are those things that helped you solidify your relationship with some of your companies, and what was a deterrent in those other situations? And you can do it later, or I don't know if there's other questions, but I just would like to.
I'll do a fast version. The company that comes to mind where at first I saw the pitch deck and I was like, selling paint online, like that's not gonna work. And I'm now the biggest investor in a direct-to-consumer paint company led by a Black woman founder, Nicole Gibbons. The company's name is Claire. Here's how it went. I got the deck. I looked through it. I was like, this is a pretty deck. Like, this is great. The guy sitting next to me was like, the paint market is actually quite large and very interesting. I suggest you take this meeting. I was like, all right, this is great. I'm going to take the meeting. And I sit down with Nicole and I tell Nicole, I know nothing about the paint market. Break it down for me. And she, step by step, made me understand why this is a massive category with old brands ripe for disruption. Market's quite important for us. Founder is always very important to us. She was strong in the right areas, walked me through to understand the opportunity, was willing to admit where she was weak. And frankly, like, it is about rapport. It is about momentum. Like, that meeting was good. Her follow-up was good. I talked to my partners. I said, you wouldn't have thought it, but I think there's an opportunity in paint. They said, let's bring her in. She pitched. Of course, she pitched perfectly. And we called her back 2 hours later and told her we were putting in the money. And so that's an example of it going really, really well, even when I was skeptical at first.
And I will say that's one of the ones I missed. And there are always companies that you look at after the fact and you think, why didn't I do this? I actually met with her multiple times. I met with her when it was an idea in her head. I met with her, 3 or 4 months in, 6 months in. And I got stuck on the idea of delivering paint through the mail and how much that was going to cost. And I ended up not pulling the trigger.
Turns out it's even cheaper than she thought to ship the paint.
So
there's other things that are hard about the business, as well as businesses.
There's always the ones that got away, but I'm deeply impressed with the Instagram stuff she's doing right now. Anyway.
I'm sure that your meetings help prepare her for that meeting.
I hope.
So it all matters when you're able to get more than one opportunity to pitch.
Oh, you have a question back there?
Yep.
Yeah. Oh, don't worry. I'm not going to get on you guys because I gave up on VCs like years ago. When my first startup, that's why I wound up creating my own cryptocurrency because I was done with the whole process. But at any rate, my question is, do you think that there is an intermediary missing between VCs and Black founders? Like there's a missing link because I'm actually about to start an accelerator because I do believe there's a missing link. I don't blame all you for that. There is some things on this side that, there is some things on this side that is fundamentally missing, between the connection. I mean, this is about finance and quite frankly, finance is not a very good strong point in the community. So, but on you guys' side, what do you do in terms of maybe facilitating the missing link between what this community is trying to present as opportunities and what you're trying to present as money, and where you can bring those two together, because so that number one, it wouldn't all be on you, and then it would make it easier on the founder side that's pursuing money.
I'll actually answer this first because I would point to something Sue Tien did or started several years ago, bringing together female founders. And how many of them are there now in your database? Yeah.
So the female VC
Yeah.
database, 800 something women.
Yeah. And this was at a time when female VCs weren't really talking to each other very much. There was a sense that that if you shared something, you might lose out on it. And they took the opposite tack and created a kind of alliance where a lot of sharing could go on. And I think it was a first step to what we're starting to see now, which is, I think, a whole lot more cooperation and as a result, I think more hiring of women at VCs. So beyond whether there's a need for an accelerator or whatever it might be, I think there's definitely, it would be incredibly valuable if there was an organization that brought a lot of you together where you could share each other's deals a whole lot more, and you could become a voice for more than just your company, but to help a lot of VCs understand what's out there at any given moment.
I'll also add that, I don't know if there's a form factor, if it's an accelerator or another VC fund or whatever it is that would improve the amount of money and the number of companies that are being funded or that are being started by Black female founders. But I do think that very much what Charles said, more Black women need to control capital in whatever form that may be, whether they set up a traditional VC fund or a debt vehicle or any number of hybrid things that you can do nowadays. More Black women need to be controlling capital to put that into companies run by Black female founders.
I mean, the other thing I would say is we underwrite a handful of events. Like I think founders solve founder problems better than VCs solve founder problems. So we have a few sub-communities of Black founders that I know who are like, hey, we want to all get together and have dinner and talk about fundraising. Or we want to get together and dinner and just catch up. I'm like, okay, as long as you guys don't do anything crazy, Precursor will pick up the tab for this one so that money's not an issue for you guys getting together and having fellowship and community. And so I've had a handful of groups where we've done this, but I'm like, I would much rather underwrite something that someone brought to me and said, this is going to work, and it's going to work because I'm the customer, than me say, I've got this great idea. I'm going to take you all away from your companies for a week, and we're going to go camping in the mountains and talk about, you might be like, I'd rather work in my company, actually, instead of do that. So I think founders come up with better ideas. So as you think about things, like this is to anyone here, like I'm always looking for ways we can take our modest management fees and apply them to catalyzing things that are important to me.
And the thing I'll add, besides sponsoring events, we like to use our space for the community, and we're located in New York and in San Francisco. So if there ever is an event where you need space, reach out to First Rounds. We'd really love to host events, and we don't even need to be there. We'll just let you use it.
So, if you are not a part of Visible Figures, please make sure you have my contact information. What Charles just described has been in existence for 3 years.
Yeah.
Exactly.
Yeah.
Thank you.
Yeah.
Okay, so I'm getting many signals that we have to wrap up. Thank you for inviting us. This was actually illuminating as well as, I hope, useful. So I hope there's another one of these in the relatively near future and that we can participate again. Thank you.